Now subsequently let's also discuss about what is the trend and trend reversals. What is a trend and what is a trend reversal? A trend is a broad upward or a downward movement of a stock price over time. So over a period of time, if a trend is formed, means the trend can be an uptrend or can be a downtrend. And upward movement is called an uptrend, while those which move lower over a period of time are said to be downtrend. So over a period of time the stock falls, then it's called a downtrend. So a trend is very clear. So a trend can be an uptrend or it can be a downtrend. And trend reversal means what? Trend reversal is nothing but, say for example, a trend occurs when in the direction of a stock and changes and moves back in the opposite direction. That is called a trend reversal. So means the trend is in the upward direction. Trend reversal means, yeah, the current upward trend is completed and again the downward trend has started. So this completion of uptrend and starting the downward trend is nothing but a trend reversal. So trend and trend reversals are quite common in stock market, and any stock or any index, both are quite common, and you need to understand what is a trend, how to identify a trend, and finally how to exploit the trend formation and for the taking the decisions. And also trend reversal is the same way, how long the current underlying trend can be continued, and so what is the possible reversal for the trend, and also how to identify the trend reversal before it reverses actually, to take a better decision in trading. Now on the screen you can see the trend reversal, how the trend reversal can be seen. So where the underlying trend is a downward trend, and finally on reaching the particular bottom, again the stock has bounced back. So once the stock has reached the lower and bounce back has been started, means that is the trend reversal. Identifying trend reversals, this is very important for the trader to identify trend reversal, because whether it is in the upward direction or is in the downward direction, but you should understand to what extent the underlying trend can be continued, and finally when it is going to move back. So by the time you must be ready to either enter in the market or exit out of the market. So trend reversals represent the sentiment change in the underlying stock, and also uptrends that reverse into downtrends indicate the profit taking off from our often from overbought price levels. Means once they enter into market and the trend has continued to some extent, and then so after reaching to some kind of or desired level, then traders may feel that they are in the expected profit level, and then they may take a decision to exit. So while they take decisions in exit, so then it may see some kind of profit booking, and finally you will see the downward trend. And downtrends that reverse into uptrends indicate a sentiment change to bullish as buyers lift bids and reverse back into the bullish trend. So that's what. So the sentiment change, when the trend is bullish, then the current sentiment is the buying mode. Means people are in a traders are in a position to take more and more buying orders. But once the sentiment is going to be changed, that now the traders are not interested to buy. Now they want to sell off their things. Like in that way, the current underlying uptrend can be continued, can be stopped, and the reversal can be started. Now how do we apply this trends and trend reversals? The reversals tend to start as wiggles and or reversions that fail to bounce and eventually reverses the trend. Means when a trend is started, it may not continue like that. So there is specific time or a kind of the means period through which the trend will be continued, and after that the trend will be stopped or paused or can be reversed. So that's why you need to understand where the trend reversals can happen, and you need to take an advantage out of it. And the point of reversal is the breakout or breakdown of the current trend, and then opposing trend follows the after trend. So follows afterwards. Means When an opposing trend is started means the current underlying trend is completed, and the opposite trend means when the stock is in the upward direction, downward trend will be started. When the stock is in the downward direction, then the upward trend will be started. And an upward trend will eventually peak, and as it tries to bounce back again, it is met with stronger selling pressure and producing lower highs and lower lows, eventually collapse support with the breakdown and the downtrend forms. That's what. So when stocks go to the higher levels, then sometimes at the higher levels the stock may not be in a position to persist at that particular price level. So selling pressure may hit, and again stock may come down to the lower levels. Traders or investors must aware about this concept and would exit positions when they recognize the peak in the uptrend. So when they recognize the peak in the uptrend, then they should understand, yes, likely the trend reversal is going to be started, and they should exit from the positions. Now finally, Elliott wave theory explains the market overall view to the investors in real time. So means whenever you want to make an investment into stock market, then the Elliott wave theory will tell you whether currently the market is in the upward direction or a downward direction, whether the finally is it a better time for entering into market or not. And it will be helpful to the traders to take positions based on these views. And trends and trend reversal are also useful for the traders and investors to take better decisions. Now let's see a small quiz. Who has developed the Elliott wave theory in 1930s? That is Ralph Nelson Elliott. And Elliott proposed that the trends in financial prices results from investor psychology, because the particular the Elliott wave theory is based on the investors psychology. It's not based on attitude, behavior, or view on the markets. And Elliott proposed that waves formed are classified into impulse waves and corrective waves. Do you agree with this statement? Yes, it's true, because the Elliott has classified that the waves are of two types. One is the impulse waves, and the other one is the corrective waves. So that's all for today's class. Thank you very much for participating in this lecture.